Hello, friends. Welcome to the Weekend Investing Daily Bite of 16th of January, a day where Nifty and the rest of the market inched up further. So, this is the third day of some recovery. The recovery so far is still weak. It is not so decisive. You can obviously not say that we've seen the worst. We need much more proof before we can say that, yes, this bottom is likely a near-term bottom. But all said and done, a third day of sustaining the fall and not going down, not even covering morning gaps, I think is giving some confidence to the market. And of course, one of the bigger news that was there today was that Hindenburg has shut down operation, and Adani stocks have been flying for the last few days. So we will try to look into that uh, aspect today and how you should read such news when they come out. Uh, in terms of your strategy towards the market. So disclaimer, please read the disclaimer fully. The channel is waiting for your subscription. Please do subscribe. Let me also tell you that we are running a Hindi channel also now. The Daily Byte is also available there. In case you wish to watch it in Hindi, you can subscribe it there as well. Where is the market headed? So as I was mentioning, we have nicely retraced a few hundred points, 300 points to be exact, from the bottom. We are now pretty much where we broke down from. We are exactly at that level of 223, 300 to 350. And a few more days of this recovery will start to give more confidence. And then, of course, if we do go forward, we can retest this this average and then this top and then this top as we go along. But right now, it is still in the danger that we get 3 4 days of a pop and then we have 1 or 2 3 days of a meltdown. That is also possible. Uh, US markets are doing quite well. The dollar seems to be stabilizing, the dollar rupee. Um, so the headwinds may have stopped to some extent. The results that have so far come out are not a disaster. They are probably somewhere near what they were being expected. And any new development or some excessive selling probably can again take us down. That is the situation right now. And we are less than probably 10 trading sessions from the budget session also. So that also will start to appeal to sellers to cover their positions ahead of that important date and so on and so forth. Nifty Junior clocking 1.45%. So 3 days, three gap ups on Nifty Junior. And obviously it had fallen quite dramatically from 70,000 to 61,000 and it has recovered to 64 and a half. Not yet out of the woods, but no complaints on this recovery as well. On the mid cap space, again, the gap that was built here has been closed. We've had three gaps on 3 days. Those gaps have not been closed, plus 1% on the mid caps. I would think having recovered back this November mid bottom is a plus point for the mid cap chart going forward. Similarly, for small caps, uh, this recovery of the breakdown point is definitely a small positive, if not a large positive. The fact is that because the fall has been vertical, it will require consolidation horizontally before we start to build it up, because a very sharp V recovery is usually not possible after these kinds of dramatic falls. Bank Nifty also third day some recovery, 1.08%. It is yet to recover back to its breakdown point. And Bank Nifty is, I would think, neither very bearish nor very bullish right now. We are just reacting to this downfall, and let's see if we are able to climb back above maybe 50,000. That probably is the first indication that maybe the worst is over for now. Momentum trends, advances outnumbering declines by a wide margin, 374 to 123. This is also a good sign that the breadth of the market is towards the green. Heat maps, you can see significant greens towards insurance and banking space. So SBI, Kotak, Axis, HDFC, ICICI, all green. HDFC Life almost up 8%. SBI Life, Shriram Finance, all up. ONGC, Reliance, Coal India in the energy space all up. In the auto space, Maruti, Mahindra, Tata Motors also up. Then you had Bharat Electronics doing well. You had some cement stocks doing well. IT stocks were down today. TCS, Infosys, HCL, Wipro all down. FMCG also down. Hindustan Levers, Nestle, Britannia, and ITC along with Tata Consumers. In the Nifty Next 50 space, lot more green. You saw PSU banks go up. You saw public sector enterprise stocks go up. Adani stocks were up again. Energy stocks were up. Capital goods stocks were up. You also had commodity stocks, cement stocks up. So a lot more gain on the Nifty Next 50 space. Within sectoral trends, PSU banks staged a smart recovery of 2.6%. So they have erased all losses for this week. Metals have come back up 1.7%, erasing all losses for the week. So the week gone by now has the biggest losers as real estate, consumption stocks, pharma stocks, and FMCG stocks. FMCG is making newer lows even while market is recovering, which definitely is not a good sign for FMCG. And it may also be not such a good sign for the overall market, because FMCG, especially when markets are down, tends to be that defensive sector where money moves to. Here, even though market is down, FMCG is still bleeding. So maybe that is a sign that there is more to go on the downside. On a 3-month basis, we now have several sectors which are now in double-digit losses. So markets have been, down and out in the last 3 months. Don't blame yourself for it. That's the situation that is there. And now the erosion is also eating into the 12-month performance, where 12-month performance of several sectors are now in the red, and most others are single digit, and only some like autos, pharma, and IT are in double digits along with public sector enterprise stocks. You can see here some comeback on PSU banks. So Punjab Sind Bank, Indian Bank, Bank of India, Union Bank, all these are up. There is talk of budget announcements on PSU banks, divestment, etc. Rumors are always there on every budget. So I don't know whether that will come true or not, but maybe till the budget they will try to hold on. So Hindenburg has shut down. Hindenburg was a international consultancy which targeted corporates and supposedly showcase or expose their wrongdoings, and it was being done in the uh, with a focus to have fair, disclosures of corporates to its investors. Uh, the founder has given no reason why they are shutting down. Maybe there is some inside reason. Maybe they are under some pressure by the regulators in that country. But it does seem like very, very sudden, very, you know, uncharacteristic of somebody if they are doing well to suddenly shut down. And we'll go through some of the chapters of Hindenburg, um, events of which companies they targeted and so on and so forth. So from public sources, we've found out that they came out with reports on all these companies, mostly global companies, and there were stocks that they really impacted. So several stocks virtually got finished because Hindenburg came out with reports on them. You can see few of them here. I'll not get into detail, but few of them completely out, 100% down. So virtually out of the markets. Several others more than 90% down from where they produced their reports. You can see so many of them. And on the flip side, you had some stocks which did not go down, actually went up, and those reports were probably wrong. Several of them on the positive side also. So this, I mean, there's mixed views on Hindenburg itself. Some accuse them of, front running the market, taking positions, then coming out with negative reports of companies, and then, benefiting out of that. Um Others say that, they were bringing the right information to the markets, and hence they were doing a great job for the investors. I don't have a particular viewpoint in terms of whether it is right or wrong, but I wanted to showcase both the sides of the argument here. Adani stocks have been rallying for the last couple of days. Today also there was a rally, and 2 days back there was a sharp rally. Maybe they got to know about this development ahead of all of us, and there was a relief that maybe this is not going to be pursued any further, or maybe there was some settlement that has happened, that has caused all this. So, couple of very popular Hindenburg cases, just for information and knowledge sake. Nikola, which is a EV truck manufacturer, uh, they had deceived its investors about its technology development. They were showing a video that its electric truck is going very fast at high speed, and Hindenburg or Anderson of Hindenburg uh, uh, exposed them, and well, the vehicle was actually rolling down a hill, and it wasn't really cruising or working actually. So US jury convicted the founder of Nikola, Trevor Milton, and in for fraud. And this is where the report came. At one point of time, Nikola was being compared to Tesla, and that they will take over the EV mantle. But post that report, basically that company finished. Uh, Post that. There were other cases from Nasdaq companies, eHang Holding, where Hindenburg came out with reports and the stocks collapsed 97% here. DraftKings in 2021, 87% drawdown, and then most of it got recovered. Clover Health again 97% down. These are all Nasdaq companies, and it, on one hand, it's good to expose corporates, but on the other hand, there is no proof really whether that is being done with a motive or not. So, on X also, respected speaker Mr. Ajay Bagga has mentioned that Hindenburg was also operating in a gray zone, publishing negative reports, taking short positions via hedge funds. Short sellers, have are having trouble since 2008 because markets have been on a bull run of sorts. Some regulatory action may have been taken, and quietly, hence they are shutting down. A lot of damage has been done to companies, promoters, and marketed by targeted attacks. And there was no need for this truth seeking. And I would believe that if I were having some information about any company which I wanted other investors or the markets to know, I would go to the regulator. I would hand over my evidence to the regulator instead of sensationalizing the market without having any accountability for it, while also having positions to, as a conflict of interest in terms of shorting those stocks. So there is a lot of, messy things that were potentially happening, and it's good that this has been laid to rest. Whether they were good, whether they were ethically right, what is the truth, really don't know and don't want to get into that. So what should we do in general course of our outlook to the market? Whenever we will try to focus more on the news and make decisions based on what others are telling us in a discretionary manner, we'll always find it very, very difficult to operate. So now what has Hindenburg done to Adani, that even if one were to assume that, let's say, some of the Adani companies have nothing to do with any manipulation. I'm not even saying that others are manipulated, but I'm saying, just for argument's sake, let's say two, three companies have nothing to do with the Adani saga, then people's mind have been jaded forever now because of this report, that no, something must be wrong, because that doubt is always there in the mind. And then people will go on and try to link the company with the regulator with the government, and so on and so forth. So it's very, very difficult, once you have been black marked. And then let's take the case of Adani Enterprise, for instance. you've been you saw this company rise, and before this last decade, this company was totally flat, and Adani Enterprise was not rising at all. And then, in the last 3-4 years, stock went from 100 rupees to 4,000 rupees. There was ample opportunity to ride the wave, and basically follow the stock on momentum basis, even without any news. Whether you knew anything was happening in the company or not, that was not essential. And then Hindenburg published a report, stock crashed 75%. If you followed your strategy, you also would have gotten out at some point. uh, but some people probably who did not have any exit plan, who did not have any rules how to get out, uh, either could have believed the report or gotten out, or may not have believed the report and gotten out, or exited at the bottom. And then stock started to go up again. Almost it retraced the entire fall from 4,000 to 1,000 it came, and then from 1,000 again it went to 34, 3,500, something like that. So again, there would have been huge regret, and you would have entered the stock again to lose back, from nearly 3,500 back to 2,000 again. So all that would keep happening, because another report came in 2024 and another, uh, you know, uh, loss happened. So instead of focusing on what the narrative is, what is being said about the company, and once in a while, of course, some narrative will hurt you also. But if you see the fact that going from 100 to 4,000 and then dropping from 4,000 to 1,000, there was a ample opportunity to make money in that. Even if you lost some from the top, that is fine. So not having any, you know, in the back of the mind, any bias that yes, whether this company is ethically right or not, because nobody really knows. Nobody really knows, and you can only find out, over a long course of time, and the market will self-correct. So following the price, not the news, irrespective of the news around the stock, having clarity on these points can really benefit you in massive ways. So always have these four things in clear in your mind: what to buy, how much to buy, when to buy, and when to sell. So this once this all this is clear, then whether it is a Hindenburg or any other Berg who comes to play, really has no role to assign here. Even if you were not doing any complex strategy, just following a 200 DMA strategy also probably would have gotten you out here, may have gotten you in here, may have gotten you out here, and so on and so forth. So you need to really go after any news based decision making, so as to say, which becomes the classic trap for retail, because news usually comes at a time when either the stock has fallen or it comes in a way where nobody is able to exit at that time. So the news actually is pointless to the extent that the price would have already, given you or shown you that path ahead. So follow rule-based system, avoid falling into these traps, focus on the price and not the news. This is sort of my approach towards stocks. Do mention in the comments, how do you take decisions when such reports come? Do you get biased by all this? And that probably takes away a lot of potential gains from a group or from a stock when such reports come. And a lot of stocks would have had many reports like this, maybe not from Hindenburg's name, but from other analysts or other such research firms, and they would have done well also at some point of time, like I showed you in the example below. So don't allow these reports to bias you. Go ahead and follow price, and that probably will give you enough uh, you know uh, investment thesis to keep you with the winners in the market. Thank you so much for watching. Please do like and share these videos and subscribe to the channel. Thanks.